Hello guys, this is Oba FX. Welcome to my YouTube channel. Yesterday we started a series of top-down analysis and we looked at the synthetic index crash 1000 and we did a top-down analysis, and just like I promised, I said I'll be coming back for us to see how our market outlook played out, and that's exactly what I'll be doing this evening. And I also asked that people should suggest any currency pair or index that they would like us to look into. And a few people reached out to me on my WhatsApp line, and a lot of people were suggesting that I look into gold. So I would also be doing that as time would permit us. So very quickly, yesterday we looked at crash 1000, and just to summarize what we said yesterday, we said it from the weekly time frame, it was in a massive downtrend, and that in this massive downtrend, if we go to the daily time frame, that it had a mini uptrend, which was already at a key point of interest. And this key point of interest was a strong resistance zone from the weekly time frame. And then we looked closely at what was happening at this key zone. And we said that a trend line had been broken, and this was as a result of an M pattern that was formed at this key resistance zone, and that this trend line was also retested, and that in the process of this retest, the market stalled a bit. We went to the 4-hour time frame and said that the stalling of this market led to the formation of a head and shoulder pattern. So this was where we stopped yesterday without these other parts of the market playing out. So yesterday I talked about the head and shoulder pattern, and I advised against buying these markets because the pattern was quite clear that if for anything, if you are to engage this market, you should wait for the neckline to break, and that the market was likely to go down. And today, voila, that's exactly how it played out. So this was the head and shoulder pattern. If we go down to the day 1 hour time frame, where it's much more clearer, we can see that the left shoulder, the head, the right shoulder, the neckline actually broke, and the market has been going down. So if you ended up taking this trade because I didn't follow it up, I'll be expecting that your first take profit should be here, and then you can take some profit and observe what the market will do. So that's that for the crash 1000 that we analyzed yesterday. So based on popular demand, I would now quickly look at gold, SAUUSD. So for a very long time now, gold has been going up, has been making a lot of highs and a lot of higher highs and higher lows, and it even got to an all-time high of $3,500. So, but from the weekly time frame that we have before us, what gold is doing now is making like a sort of retracement, and for the past 2 weeks, we can see that we had last week it was massive red candle, and this week it had continued to come down after being rejected from the $3,500 mark. So, excuse me. So what will gold be doing for the rest of the week? Today is Tuesday, and we'll have the BS still in control of the market. So let's go down to the daily time frame to see if we'll get more information. So let me take these out. So as is customary, what I simply do is I start analyzing from the higher time frame. From the weekly time frame, we can see the direction of the market, that the bears are sort of in control, even if gold has been in a massive uptrend for quite a while now. So to get a clearer picture, we'll come down to the daily time frame. So if I'm to zoom this in a bit, I can see that, just to be clear, that gold is still in an uptrend, I can place a trend line here with 2 touches. So this would be my outer trend line, because I can also see that I can still accommodate another trend line. So this will be like my inner trend line. Now, if you don't know how to draw trend lines, I have a video, one of my videos, past videos in the channel where that was actually explained. So you can just search and take a look at it. Now, this creates a very, very beautiful situation. Now, having gotten like a trend line that matches, that gives me 3 touches. Another thing I'll look out for would be if the market is currently at any form of support or resistance or a psychological level. Now, if I'm to do that, to help me, I can come to the line graph. So from what I can see already, if I place a horizontal line here, I can easily get a psychological level. Psychological levels are round numbers. I'll do a video, another video, to explain fully what psychological levels are and how to use them. But for now, just follow that gold is currently around the $3,300 mark. Remember, we said that it was rejected from the $3,500 mark. So currently it has retraced down to 3,300. So if I'm to put in a zone here, so this $3,500 mark can help me have what? A support zone. So now we have two things to support our analysis that gold is still very much in an uptrend. We have a trend line with 3 touches, and then we have a support zone, and as well as a psychological level of 3,300. Now, if I put all this together, I can boldly say that gold is currently at what? A very, very good key zone. Now, this we say this is I also have a video in the channel on support and resistance. So if you have the time, you can look at it. But just to buttress why this is a very, very strong support zone is because if you look at it, each candlestick here stands for a day or represents a day. Now you see that this this particular support zone was broken, where it was acting as a resistance, and for why it tried to come back, and then it acted as a support to push price up. Price came down several times and was rejected by this zone. Price finally got to break the zone, but was rejected severally. So this zone is not just acting right now as a support, it has also acted in the past as what? A resistance. So this makes this a very, very strong zone where we can start now looking out for what could play as to maybe give us trading opportunity. And in this case, because we are at a support zone, I'll be looking to buy the market, or I'll be looking for buy opportunities. So to see if we can get more information from this, I'll move to the H4 time frame. Now the H4 time frame still shows us exactly what we saw from the daily time frame. So we have our first touch of the trend line, our second touch, and our third touch. So what I'll now be looking out for here will be trading opportunities in this particular zone. Now, how will I get these trading opportunities? I'll be looking out for chart pattern. If I see maybe like a double a double bottom forming now in this lower time frame, then I'll be looking for maybe the break of the neckline, and if once the neckline is broken and retested, then I'll be looking to buy. Then I'll also be looking out for for candlestick patterns, maybe like a bullish engulfing candle. If it forms here, then I'll know that okay, maybe I can probably scale to the lower time frame and the much lower time frame to look for buy opportunities. Then also another chart bullish reversal pattern could be the inverse head and shoulder. I explained this in the previous video where we're analyzing the crash 1000. So basically for gold, the market outlook is that gold is still very much in a bullish trend, and it is currently at a very strong key point of interest. And if all you now need to do is to watch closely and see if you can get an entry. Another means you can enter this trade is to have a counter trend line. So if you place a counter trend line here, once the market goes above to break this trend line and there's a retest and it makes a retest, then you can also take your buy trade. So all we can as well still go down to the H1 time frame. From the sea of red candles that we're seeing, we see that buyers are still struggling to come into the market. But definitely this is a strong zone, and if we can get a reversal, any form of reversal pattern, whether candlestick reversal pattern, charts reversal pattern, or a break of this counter trend line and a retest, then we can enter our buy trades. However, I would like to warn concerning something that I noticed here. Now, we can see that the distance between our outer trend line and this inner trend line isn't much. So most times the market makers might want to use this zone now as a liquidity grab. Now, what do I mean? Liquidity in the sense that they know that a lot of people will be looking at this zone to get into the market. So most times what could happen would be the price breaking this zone only to get to this outer trend line and then reverse to the upward direction. So I wouldn't want to take much time on this video. Like I said, if you want to be able to analyze the charts masterfully like this, you can always reach out for mentorship class with the information in my bio. So thank you for watching, and if this video has been in any way insightful to you, I would like to plead that you click on the like button, click on the subscribe button, because I'm going to be dropping analysis videos throughout this week, top-down analysis videos throughout this week. So this is the market outlook for gold. Gold is still in an uptrend, and it's currently in a key zone, a key psychological level, with the third touch of the trend line. If there are no reversals at this zone, then you'll be looking out for liquidity grab for the outer trend line. Cheers, and thanks for watching.